asking about Forex trading with no indicators or trading Forex with no indicators. And the interesting thing is I see where they would come up with that question because there are people who are talking about indicators as if they were a bad thing. An indicator, just like anything else in Forex trading, is simply a tool. Now, it certainly makes sense that people who have misused those tools, who simply have not used those tools effectively, would think that there is something wrong with the tool itself. This would be the equivalent of trying to use a screwdriver to drive nails into a 2x4. It's not the right tool for the job. So you can see that if it's easily misused and abused, then people are not going to like it. So I think another part of that is people have jumped into Forex trading without the proper preparation and have been told that they can just grab something like a relative strength index or a MACD or moving average or stochastics or something, throw it on a chart, and immediately know how to trade profitably. Well, of course, nothing could be further from the truth. I believe a lot of people have lost a lot of money just jumping into it and misusing indicators. And that people who are now touting that indicators are a bad thing are attempting to appeal to people who don't trade for a living, beginning traders, and empathize with them and connect with them in that kind of way. Here's the truth of the matter. There are so many different ways to profitably trade the Forex market. There is no one way, there is no one indicator, there is no one not indicator. So for those people who are, you'd want to trade without an indicator based upon price action, this is not anything new. People are advertising that it's something new, but how do folks think that people traded before there were even charts? It was strictly the price. With charts became when charts became popular, then the enhancements became popular. You're able to draw things on the charts and use indicators, etc., in order to assist you in your trading. Now, what we're looking at here is a candlestick chart, okay? And I'll see people advertising something that says, trade Forex with no indicators. Again, making an attempt to appeal to people who have used indicators improperly and who have lost money. And then they'll display a candlestick chart just like this. And I'm not certain what people think candlesticks are, but if it was just pure price, it wouldn't look like this. Okay, is this an indication? It's green and it's red. So everything but the price itself is an indicator. If something is red, that it indicates a downward trend or a bearish candle. Green, indicating a bullish candle. Again, indicating. So it's kind of odd that people would talk about trading with no indicators and showing actual candlesticks on the chart. Maybe people don't consider candlesticks to be an indicator. Any derivative of price and time can create an indicator. Okay, and this again, the red indicates bearish, green indicates bullish, simply based upon the patterns of opens and closes. So what I'm going to do is I'm going to show you, we're going to switch over to a bar chart, and we can talk about trading without indicators, no problem. All right, here we are, and this is the same chart except it's in bar chart form. Okay. All right. right. So if you're looking to trade, you can trade lots of different ways based upon the price action. Say you wanted to come back here. Let's go to some data. This is 60-minute euro dollar US dollar data. And let's go to some data here. And let's take a look. Let's say we wanted to trade based upon breakouts of some highs and lows. Okay, we could definitely do that. Okay, let's move on. Okay, let's trade a breakout of that particular high. Okay, and we'll trade out a breakout of that high. And again, I've just drawn a horizontal line on here, so people won't freak out about it being an indicator. You could trade against that. Now, you'd be looking at trying to get into a profit area. Yeah, okay, so this is what's happening. That's our resistance area there. I just kind of picked that particular point out of thin air. If you're going to pick another point as far as support, you could pick this area down here. I've put a horizontal line down here as well. Okay, you see we bounced nicely off this particular support level. We fell back into it. Now, if we were getting long here, of course, we would have tried to take some profit or set something at break even, all dependent upon which particular trading methodology you were using. Okay, now we've got some action to the downside, a close underneath the support level. And as oftentimes happens around support levels, there's levels of consolidation. So there's tons of ways to trade. We can take the horizontal lines off actually and not even consider those and just watch things like these reversal bars and the patterns and trade strictly from the reversal bars. We could, again, get up here, go long at a breakout of that level, go short at a breakout of that level. If we were looking to do that, we broke down. Almost came back up to level of resistance. As you can see, that none of this is rocket science. We're not trying to predict necessarily the direction. What we want to do is we want to allow the price to break out in a direction and simply grab some pips when it does so. Another breakdown. Sideways action. Short day there, so. Okay, we move back up towards the resistance area. And some people in sideways markets they trade back and forth in this particular way. It's an incredible thing. Again, consolidation forming at our resistance level up there. Okay, we can look to get, if you want to narrow things down, you can always say, okay, I'll look to get short here, below that level, long here, above that level. We've got some congestion in here. And the price is going to break out at some point in time, one way or the other. Okay, you see where price did break out right here to the downside, almost immediately bounced back up. If we had had our stop placed up there, it would have almost gotten us. Price meandering again. And some further movement to the downside. The interesting thing is each of these levels of highs at these reversal bars getting lower and lower and lower. So as you can see, just so happens that turned out to be a nice downward breakout. Whether you decide to use indicators or not use indicators, only use candlesticks or bar charts or tick charts or whatever, it's simply a matter of finding something that works for you. Indicators are not a bad thing, and not using indicators is not a bad thing. What is most important is that you trade successfully, you stay disciplined, and be profitable, and keep the big picture long term in mind. Thanks for allowing me to share the indicator, no indicator debate and an example of trading without an indicator. Have a great day.